Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can know by now that all three major indexes, the Dow Jones, the Nasdaq, and the S&P 500, all fell for the week. As a matter of fact, the Dow Jones is now down for 2012, where the S&P is fractionally up at 1% for the year, and the Nasdaq's up about 5% for the year. So certainly was a bad week for the Dow Jones. The market was down for the week, which meant the market was down 6% for the month of May. That is the worst month since September. And our VIX, the fear indicator, pushed to a new 2012 high just above 26, although it pulled back from there. But this week we did reach a new 2012 high for the VIX. Overseas, it's the same thing going on. What's going on in Greece? Now the leaders in Greece say they want to stay in the Eurozone. Spain, same issues. And there's still a consensus that China is probably going to do a little spending to stir their economy up a little bit. So that's still the same news, and that led to a positive beginning to the week. But as the week moved on, Wednesday, Thursday, Friday, we gave up the ghosts. And primarily the issue was we had the first quarter GDP revised downward to 1.9% instead of 2.2%. And of course on Friday, we had the bad employment numbers. For the month of May, we only created 69,000 jobs instead of 150, and unemployment for the first time ticked up from 8.1% to 8.2%. So just not a great month for the month of May, not a great month for the economy. And of course, now we're into the summer. Our traders are moving away, selling may go away. And it's going to be interesting to see what's going to be the catalyst to keep us from, allowing the Nasdaq and the S&P to give up all the 2012 gains, or is it Dow Jones that's leading us lower? As we come into next week, and we're looking for that catalyst, we have nothing on the earnings front, and on the economic data, we really don't have anything either. And so, when that happens, I go to Forex, and Forex this week has a lot of monetary policy announcements from all the banks from around the world. And we have E3 and the Apple's conference coming up, so we may get some news out of there that might move the market, especially if we finally have the official unveiling of the iPhone. Let's take a look at some of our market sentiment leaders. We like to look at the dollar, gold, and crude oil to see what they're showing us. Inverse relationship with the market, the dollar and the market. So as the market had a horrible month, look at the dollar's month of May. Matter of fact, we'll just go ahead and put out and let you zoom in on that. And you can see how great the month of May was for the dollar. Now, one of the things we showed you last week was this 83 resistance. And even though we rushed right up to it this week, it did hold up as resistance. So again, some people say, why do you draw those lines? This is why, because we need those points of reference. We need to know where value is. We need to know the context of the market. And we're going to talk a little bit about that in our education spotlight. That being said, we made our move up here. We talked about this last week. We made our move up to it. It is resistance. So we'll see if we can close above it and make that resistance support. But the dollar is definitely bullish. Gold, strong dollar. What does that mean for gold? Well, gold has been weak except for Friday. So gold was hitting its 2012 lows and really consolidated in there. And then Friday just took off on Friday. Look at all this move here on Friday. But where it closed on Friday, you can see in the past couple of weeks, this has been what was support will probably be resistance for us before we can get up here to 670. We need to get above the 1630 price point. And then, woohoo! Nobody's talking about it. Everybody wants to blame the president when gas is high and what he couldn't do. Now notice nothing's really going on, and now crude oil is all the way back to 2012 lows. And nobody's saying, oh, he's done a great thing. And you guys know I keep politics out of it, but it's interesting. But the most important thing for our pocketbooks is that gas is cheaper. Zoom out for 1 second, and just so that you can see where we are in 2012. We've got this $80 support level that we're watching, so it makes sense for us to go down and test that. But $80 is, even though we have some wicks below it, that's where support really starts to come in. So definitely sideways to down really. The only reason I say sideways is I think that we're going to find support here at 80 for crude oil. As we begin looking at the S&P 500 on the daily chart, you can kind of see what basically happened here Wednesday, Thursday, and Friday. We took out all of the initial gains for the week. The market actually started off all right when we thought that the European situation was being solved, or at least going away for a little bit there. But you can see we kind of fell off towards the end of the week. What's important about that? We are now below that 1300 psychological level for the S&P 500. And what's also important is we're actually technically below the 200 moving average. As we come all the way over, you can see here is our first candle for 2012. So that is at 1278. I'm sorry, 12 in the 1250s. So before we wipe out all the gains for 2012 for the S&P 500, we got about 20 more points to do that. The Dow, as we talked about earlier, has already erased all the 2012 gains. And remember, sell in May and go away. May, as we talked about earlier, worst month since September, down 6%. Our indicators are all oversold at the current time on the daily. We'll go out to the weekly, and we see just how bad this week was, and we see basically a fall in 3 pattern. But more importantly, we can see what's going on here with the month of May. Indicators have more room to go to the downside, but they are getting close to being oversold for the weekly. And one more time out to the monthly, and we see obviously the month of June is starting to start off negatively, but we can really see how bad the month of May was. We do have this psychological price level down here at 1219 that we're watching. And again, keep in mind 1250 is where 2012 began, and we have the 200 moving average below that. Keep in mind, for the past couple years, the 200 moving average has been our support price level. So, and that is all the way down here at 1140. Indicators on a monthly, plenty of room to go to the downside. Let's zoom on out and switch back over to the NASDAQ and zoom in. Just like the S&P 500, we can see we are below the 200 moving average. We can see the end of the week being the worst. But you can also see, coming all the way over here, there's 2012. And so we began at around 2640. 2640 is where we started the year off for the NASDAQ. So we're still up. I believe it was 5% we talked before. And you can see we're also at another psychological point here, 2740, that we've had for from 2011. So, could be some support. Certainly, the daily indicators like the S&P 500 pretty much oversold or about to get there. We can see the weakness with the falling 3 pattern here with the weekly. Good news is the weekly, the RSI and stochastic are pretty much oversold, although MACD has a little bit more to go. And finally, the monthly. Zooming in a little bit here for our monthly. Again, the bad month of May. June starting off not so hot with June 1st. Of course, it's only one day. And our monthly have more room to go to the downside. So as usual, what's going to be our catalyst to change the sentiment? We're pulling back. And as we showed you earlier, there's not a lot on the economic front, so we go to the Forex side, and we know that we have a lot of the banks making their monetary policy announcement. Let's take a look at our market leaders. Okay, as we look at our market leaders, we're starting off with Apple. We'll zoom out in here. And the good news about Apple is this. We're really not at the 2012 open. You know, we've got plenty of room to get to the 2012 open. So it's showing a little bit more strength. But we continue to put in lower highs. Take my trend line. So we are continuing to put in some lower highs here. So it'll be interesting, even though we broke out of it this week, if this doesn't hold up as support, you can also see our other price point that we're watching, 550. And then we have a swing low here at 525-ish, 526 that we're watching. So sideways for Apple. What about Amazon? Amazon pulling right on back. Hopefully the 200 moving average. So it is above the 200 moving average, so it's a little bit better than the S&P 500. But we can see that it is showing some definite weakness. Once we enter back into this 190, 220 range, it looks like we want to head down here and get back down here to the 195, 196 range, and certainly 200 moving average. 50 moving average trying to hold up its support, but sideways to down on Amazon. And our new stock that we're watching here, I gotta go down to the hourly for this one. And we can see how we're doing. We finally broke out of the range of 31 to 33, and now we're down here in the $28, $26 range. So I'll go in and mark that in for us. We're right in there, and we'll see what happens there. But still sideways to down for Facebook. Come back, go to the daily. Let's go up to Google. One thing that's interesting about Google is right here. What we did is gap down below that key support price level. So here's our candle right here, and we gap below 580, the support that was supposed to hold up here. Now we still have some other swing lows, one from 2011, another one here from 2012 at this 565 price level. And you can see our 500 moving average may provide us a little support here, but it is interesting that we've gapped right below all of that potential support, and we'll need to see if these swing lows can now hold us up also. Sideways to down, if not down on Google, Goldman Sachs, as we know, has given up all of this. Just when you thought it was safe to go play with the banks, it's given up all of that move. You can see where we opened up here for 2012. So, you know, again, definitely some weakness, but we do see these swing lows right in here at the 89, 87, 90, and there's sort of like a $3 range here where the market begins to define its support. So I certainly think we can head a little bit lower, and then once we start getting to $90, we'll see if that can hold up. Our ultimate line here is at 87.90. So sideways to down for Goldman Sachs. IBM. Also notice that it's below that key support level. That's a theme that we're going to start seeing. You know, Apple was our strongest, but we're seeing there we go with Google gap below its support, Goldman Sachs gap below its support, and then look at IBM. IBM below its support, 200 moving average, like the S&P 500, perhaps that will hold up. But all this consolidation, we're below that now. If the 200 moving average doesn't hold up, you know, we're in a new range between 178 and 190. So we'll have to watch for our move down. And you can see, even though we have a lot of consolidation in here, if we do break below the 200 moving average, there is a potential to head all the way back down. So sideways to down on IBM. That's really the first time we've put down on IBM. What about Intel? Intel. Trying to hold on to the support at 25. Also have the 200 moving average here acting as support. If we break that, we're probably going to go down to 24. But for right now, we're going to say sideways to down. Notice that all the support was here. And then this week, when we came up to it, it became resistance. What was once support becomes resistance. MasterCard, one of our strongest stocks. I'm not going to say sideways, definitely sideways. I'm going to give it the benefit of the doubt because it is part of above its channel range here. But so sideways, maybe sideways to down. We need 385 to hold up. Netflix, like Goldman Sachs, has given up all of its gains. But it's trying to hold on to this last level of support at the 62. Look at that gap down on earnings right in here. Overall, Netflix sideways to down. And finally, Priceline. Again, one of our big moving stocks to the upside. Now, one of our stocks moving down. We moved up so fast. Is there going to be volume support to hold us up? Now, we can see right where we are right now. This was a gap up on earnings. So we need this to hold up. You can see that's where we closed on Thursday, but we got below it on Friday. Zoom in a little bit there so you can see it better. We closed here on Thursday, great, but then we got below it on Friday. So next area of support probably will be where we got that from, which is around 595, 600. Otherwise, look out for a test to the 200 moving average. Priceline sideways to down. So the majority of ours, Apple's really the only one we didn't say to down. Most of them are sideways or all out down moves. So our leaders are taking us lower. And again, what can be our catalyst to move us higher? And we know Apple has the WWDC conference coming up. And we also have CES. Or is it E3? E3 is coming up this week, so there might be some technology stocks that show little pops with some of the news that's going to be coming out here over the next 2 weeks. Moving on to our education spotlight, we were talking about before why traders can't follow rules, and today we're talking about what are your mental traps. And some of the common mental traps that traders have to overcome. The first and the biggest one is loss aversion, fear of losing, fear of the pain from losing. And you know what we have here is that $1,000 gain feels like $1,000. Woohoo! Yet when you lose $1,000, instead of feeling like $1,000, it feels like $10,000. And so because for some traders, it hurts more to lose than to win, they try to avoid it. But again, as we always say, a losing trade is just the cost of doing business. If you've taken the time to backtest and prove your system so that you have positive expectancy, then a loss should just be a loss. It should be $1,000 gain is good, $1,000 loss is good. It's just the cost of doing business. And so that shows our lack of objectivity. And we put more emphasis on our losses than our wins, and that's a mental trap. And that, what happens there, then our bias starts to change. And that's when we start to get in that tick-for-tick battle, or one tick in our favor, 4 ticks against us, and we don't get out of the trade. And the other thing that happens is our context. And we start looking for revenge trading. We start taking trades when we know we shouldn't. I have a ebook coming out talking about the, understanding context of the market, and when to trade and when not to trade. And people lose that context, and they see their setup, and they take the trade, but they don't take that setup in the context of time of day, the sentiment of the market, the trend of the market. All these things are traps that we have to learn to overcome in order to become a successful trader. Again, comment, like, and subscribe. Again, I want to mention our You Make the Call channel. We got our Facebook video up. Our Apple video up is going up today. So, again, You Make the Call is just about giving you detailed information about one stock, whereas this is a weekend wrap-up of the stock market in general. Where You Make the Call Stocks is the channel, and that's just about individual stocks, giving you the best technical analysis and market buzz of that. You know about most of our resources. Our coaching sessions, how we can help you develop that mental mindset, trader's mindset, the psychological capital that you need to enter each trade so that you can avoid those mental traps that we talked about. We do have managed accounts that we can work with you with. And finally, our stock traders, we have a little trick for you to help you catapult your trading also. But in the end, it's all about the mental mindset. It's all about the trader's mindset. It's all about understanding when and why to trade. And that's what we can do through our coaching program. Thanks, guys, and I'll see you next time.